Of lately, ESG funds have become the flavor of the year. But what is this mutual fund scheme? Why all of a sudden mutual funds are running to grab all money and attention under this scheme? What does all this mean to a layman investor? Are investors making money by investing in this thematic scheme? To get reply to all the above questions, let's begin our presentation on ESG funds. Hello friends, welcome to the channel of Wealthfinmart, and today we will be discussing on ESG. Green investing, ethical investing, socially responsible investings are the labels given to this form of investing. However, there is no single term to describe this form of investing. ESG still tends to mean different things to different people. Now let's move towards understanding and meaning of the term ESG. What is ESG? ESG investment focuses on how companies make money rather than how much money they make. It is based on three critical parameters. E stands for environmental. S stands for social responsibility. G stands for governance practices. Let us go slightly in depth to understand this. What does environmental cover? It means how well the company uses its natural resources, positive contribution to the climate, water and waste management, air pollution, etc., etc. In other words, how does the company impacts whether positive or negative way towards environment? Secondly, social responsibility covers how it focuses on gender diversity, how it treats its customers, stands it takes on social issues. Labor management. And lastly, in case of governance, the company is judged by the whistleblower policy, irregularities with number reported, financial fraud, safety stand, any bribery cases, etc. In other words, it focuses on triple bottom line, which is people, planet and profits. ESG funds are built and run on the above three pillars. Why are ESG funds important? The primary goal of this ESG is to create capital appreciation through investments in a diversified portfolio of businesses that stick firmly to environmental, social, and governance standards while ensuring a positive effect. They aim to stay away from businesses that, among other things, lack transparency or pose a danger to financial misconduct. As a result, they make investments in companies that are sustainable and follow to all regulations and standards. Work plan. The process entails assessing each investee company based on ESG factors, communicating with them before and after annual general meetings, and incorporating ESG philosophy into the entire investment decision-making process. This investing strategy looks beyond traditional approaches to evaluate risks and opportunities for companies and invests in those that are taking right steps to satisfy ESG requirements. These non-financial factors are part of their analysis process and plays a crucial role for investment. Are more companies willing to move towards ESG? While data and costs continue to be the most significant barriers to incorporating ESG into investment decision-making, organizations plan to invest more in technology and hire specialists to overcome these obstacles. Yes, the company's profits may take a dip in the short run, but it will undoubtedly benefit the company in the long race. It becomes the company's norm and can be added to the cost of doing business. The merits are boundless. Thus, ESG schemes concentrate on the company's non-financial aspects. ESG funds in India. In India, there are about 10 to 12 mutual funds which have launched their ESG funds. Most prominent among them are SBI ESG Fund, Kotak, Axis, Birla, ICICI, Invesco. Though this concept is new in India, it is getting widely accepted and in the coming years will play a major role. In India, this ESG funds is a step in the right direction. It is not a traditional mutual fund scheme and more of a thematic fund. It views the company from ESG lens. Conclusion: what is the future of ESG funds? What is currently referred to as ESG proof will soon become the bare minimum for doing business. So much room for expansion. Over the next 5 years, 60% of all respondents expect their ESG portfolios to outperform. As a result, outperformance cannot be ruled out. ESG issues are increasingly taking center stage as institutional investors use their clout to direct more funds towards investments. The challenge of securing growth in a volatile and uncertain investment environment is a major motivator for ESG. Statistics: ESG assets managed by registered investment companies totaled $3.10 trillion in 2020, up 19% from $2.61 trillion in 2018. Asia Pacific remains more optimistic about ESG integration than the rest of the world. If sovereign funds, pension funds, and other institutional investors shift their focus to sustainable investing, large sums of money will be channelized through ESG funds. Technology companies are the ones which gives highest ESG score, followed by banking and financial services. Though ESG has grown rapidly in recent years, as the saying goes, this is only the beginning. We now come to end of the presentation. Have a look at the famous quote. If you like the video, do share and subscribe. Thank you, and let's take care of the earth.